Good morning, everyone. It's Rob here. Yesterday, or maybe it was the day before, doesn't matter. I was on a call with with a fireliner, and he actually asked a really cool question. He said, "How do I start the day with a bias?" And of course, my immediate answer was, "Oh, no, no. You don't want to have a bias when you're trading. You just want to trade what the chart is telling you to do as opposed to what you think it's going to do." And so the conversation kind of went from there. And then, of course, after we hung up, I said to myself, well, that's actually a pretty good question. And I thought about it and I went back to the charts and this is what I have right in front of me. And I said, well, I guess maybe we do take biases. We are human and we are capable and most probable bias creating creatures of habit, that sort of thing. Anyway, so I looked at the charts and I went, yeah, I would have a bias. So in this case, take a look at the S&P 500. On the left, we have a chart of the daily. And we can see here, apart from yesterday's damage, that huge candle that came screaming down, the market was going up. That red moving average is a 20-day simple moving average, and the yellow one is a 50-day simple moving average. That's all I use to determine the overall trend, or the way I interpret the trend. So I'm sitting here going, okay, we're in an uptrend on a daily chart. So how's that going to bias my trading? Well, I'm going to be looking for long trades. That's what I want to be doing. Now let's look at a chart on the right. We are inside the value range and actually closer to the lower value level than anything else. The IP is still quite high above us here. So even though I'm carrying a bullish bias, my short-term trading chart is saying no go, don't do it. You're in the chop zone, that kind of thing. So I went, all right. So now basically, I am not going to trade until I'm way up here. Now, I know a lot of you are going to now say, but Rob, holy cow, there's a whole lot of room between here and there. Isn't there going to be any opportunity? Of course, there's going to be opportunity. There's always opportunity. But you are speaking or listening to a guy that is a hyper chicken. I personally don't want to trade until I'm outside of this value range. It's just the way I am. Yeah. Luck is not on my side when it comes to trading. I'm always wrong when I try to forecast or predict something. That's why I developed these fire lines in the first place, to keep me from thinking. so so that's just the way I'm built. You, on the other hand, you might have more of an appetite for risk, and you might sit there and say, oh wow, okay, we've got a straddle at the inflection point, I'm going for it. That sort of thing. And that's great. And maybe if it sets up really well, I'll sit, if it gives me a straddle or a break, hold and go at the inflection point to the bullish side, I might, I might bite down on my lip and go for it because of my bias is overall bullish. But 95% of the time, I'm just going to sit on my hands until I get out of the value range. Okay, so now we can clearly see, now that we've got that out of the way, let's do a quick little recap. Clearly yesterday we had this, it was just a lot of damage done to the chart. It really blew the structure in a million pieces, and we're going to kind of have to wait and let it, resettle itself. But it did. It came all the way back down. In the panic, it went through the 50-day moving average, but it has recovered somewhat. So I still maintain a bullish bias here. Okay, so let's go over it. Let's check out the NASDAQ. Now over here, yes, the damage was pretty bad, of course, but this time the 20-day moving average captured it, and it was able to hang on to it. But again, I do have an overall bullish bias, but I'm inside the value range. So the same deal. What this tells us when you get a big, huge candle like that is it basically says, beware, volatility ahead. So that makes me very, very nervous to trade until I'm outside of the value range. All right. So I'm kind of neutral intraday at this point. And last but not least, what I'm kind of liking these days is Bitcoin. And here we have Bitcoin again. The 20-day average kind of acted as a break on the downfall, on the fall, and it's trying to recover. But yet again, here we are in the value range. So I'm looking at these three markets and I'm saying at the very, very earliest that I will try along is at the inflection point. I'll be looking for a straddle or a break, hold, and go setup at the straddle. Now, or at the inflection point, sorry. It may or may not happen. I don't know. But what I do know is after a train wreck of a day like yesterday, pretty well all bets are off for me. And if we're going to get a continuation to the downside in any of these markets, I'm not going to do anything, and I'll look and see how the chart is if and when it gets below that lower value level. Okay, so that's it. That's all I do to create a bias going into the day. What's my daily trend, or what's the trend on my daily chart? And then where am I on my intraday trading chart? That's simple, folks. It's not hard. This is not rocket science. It's hard to get a handle on at first, but then once you've got it, you've got it. Okay, we'll see you folks in the room, and we'll chat further about this and other stories over there. Okay, take care and play safe.